morning. I'm Jen Amos at Weiss Research.
I'm Andy Myers, and this is your morning market alert for Monday, April 18th. We're looking at a lower open on Wall Street today as the first quarter earnings season kicks into high gear. The biggest name out with results this morning is Citigroup. The financial giant topped expectations despite a decline in its quarterly profit. Citigroup also said it reduced its credit losses as capital strength improved. Right now, Citigroup is about 0.5% higher in the pre-market.
Halliburton is also set to open higher, up about 1% right now. First quarter profit at the oilfield services company more than doubled, and revenue jumped 40%. Both numbers topped Wall Street estimates. Meanwhile, Eli Lilly reported a 15% decline in its net income due to restructuring and R&D charges. However, Lilly's adjusted earnings and revenue came in above forecasts, and the healthcare giant affirmed its earnings outlook for the full year, sending the stock up about 1% in pre-market trading.
We also have some M&A news out of the healthcare sector. The Swiss medical device maker Synthes confirmed that it's in talks with Johnson & Johnson. Last week, the Wall Street Journal reported that a deal between the two companies could be worth about $20 billion. Synthes makes devices to help fix and regenerate skeletal tissue and specializes in spinal products. A deal would allow J&J to double its market share to 30%, and put it right behind Medtronic in that segment. Johnson & Johnson is set to open higher on the news, and Synthes is jumping 7% in Swiss trading. But British medical device maker Smith & Nephew is dropping 3.5% in London. There had been speculation that J&J would make a bid for that company.
Overall, stocks across Europe are broadly lower, and the European bond markets are in turmoil on news from opposite ends of the continent. In Finland, a party that's against any more bailouts won the second most number of seats in the parliamentary elections. The True Finns party may become a part of the country's coalition government, which could derail the EU's planned rescue of Portugal. Finland is the only Eurozone country that requires bailouts to be approved by its parliament. Meanwhile, Greece reportedly asked the European Union and International Monetary Fund to restructure its debt. The Greek Finance Ministry denied the report, but the cost of insuring Greek government bonds against default is jumping.
The markets across Asia were mixed overnight following another move by China to reduce rising inflation pressures. The country announced its fourth increase this year in the percentage of deposits that its banks must hold in reserve. The move comes just weeks after China's latest interest rate hike, and it follows Friday's report showing that consumer prices rose at their fastest pace in nearly 3 years. Asian investors largely shrugged off the news, but longer term, if China is successful at slowing its growth, it could reduce demand from the world's second largest economy and threaten the global economic recovery.
Finally, let's take a look at commodities. Crude oil prices are dropping back to around $108 a barrel, despite a production cut from Saudi Arabia. The world's largest oil exporter said it believes the market is oversupplied and reduced its output by around 800,000 barrels a day. The report added to uncertainty in the oil markets as violence across the Middle East and North Africa continues. But traders seem relieved that the presidential election in Nigeria was largely peaceful. Meanwhile, gold is dropping back a bit after closing at a record $1,486 an ounce on Friday. That's the latest from Weiss Research. We'll be back after the opening bell with all the market reaction.